Traders at Axis Bank expect a bearish bias to linger in the fixed income market as investors offer their winnings from the first OMO auction conducted this year by the Central Bank of Nigeria, mopping up about 150 billion naira. Now, Odinaka Linus-Nwokonkwo, fixed income dealer at Axis Bank, joins me now for more on this. Odinaka, thank you so much for joining us on the show today. Yesterday's surprise OMO auction is driving quite the sentiment here. We're seeing a mop-up of about 150 billion naira. The bearish sentiment is likely to linger for quite a while now. Tell us about the market response we saw to this auction yesterday. This is the first since the July meetings of the MPC and the adjustments we saw in terms of the upward movement, 25 basis points, and also the adjustment towards the asymmetric corridor around the MPR.
Yes, so what we saw yesterday was a surprise OMO, as you said. If you can recall, opening the week, the liquidity was about 230 billion. And so due to some infrastructural payments, we saw liquidity go up to almost 579 yesterday. So unexpectedly, CBN announced that OMO auction, which is the first this year, offering about 150 billion. And a lot of market participants, the offshore and the banks, went for that auction. Our total bid was about 307 billion. And they were able to sell exactly what was offered, which was 150. Stop rate there closed around 10 for the shortest tenor, 12.98 for the mid tenor, and 14.49 for the long end. So for the long end at 14.49, that's a massive jump from the last stop rate, which it was about 10.1. So you could sense that this is a move to try to drive the offshore guys into the space and also to boost the FX liquidity.
And we're also inching closer towards the mid-month period where we're also seeing investors take shifting stands based on what we're seeing here in the market. How mute will the bond and T-bills market remain for this period of time?
So over time, what we've seen in the Treasury Bills market is people trade based on liquidity. So at every point in time, liquidity drives that market. Today, we've seen the OMO bills being offered around 10.3% levels. Also, for the NTB, it's still trading around 10% on the offer. So the sentiment, yes, bearish, but a bit of caution from investors. And also considering where people have these bills before, so they are not willing to take those losses. They would rather hold it up until it comes to a considerable levels where they can take profits. For the bond space, it's a bit tricky in as much as there's a bearish move. So people are still willing to buy some bonds at some considerable levels. For the 2026 and 2027, it's still trading around the 13% bid. Also, we saw offers on the 2029 around 13.15 yesterday. So overall, we haven't seen that massive hike on the bond.
And for the long end of the curve, what should we also expect?
Yeah, for the long end, what it was trading, it was around 15.3, but bid remains elevated. But if you really want to close the trade currently, you will be looking at a midpoint of 15.5 levels.
Let's talk about what investors are also having at the back of their mind now in terms of the currency market interplay here. We are seeing that widening spread between the rates at the I&E window versus that of the parallel market. We initially saw the alarming news that the naira had crossed over 900 and then it got to 910, 920, 955 just a couple of hours ago now. What sort of information does this bring to the fore as we are moving forward? How much of a volatility do you think would have in the currency markets?
For the currency market, we still continue to see it over around the 770 levels in the official market. Yes, the news of the alternative markets going as high as 925, but in the official market, we are not seeing any of those reactions. Despite we are yet to see the CBN intervene this week as they usually do in the previous week, but for now it's a bit of calm on that space, especially in the official market. No overreaction or excitement towards that.
And lastly now, what should investors be looking out for come next week?
There's a bond auction on Monday, which is 260 billion on offer across 4 maturities. On the 2029-2033. and also the 2038 and the 30-year on the run bond, which is the 53. So that's something to watch out to see where those yields close, especially as market liquidity thin out opening that Monday, because they debited the OMO auction, which was about 150 billion, and we expect market liquidity to decline. So for the amount government will require to borrow, which has always been around 500 to 600 billion, rates might increase for them to mop up that volume of funds.
And talking about the penchant of government to borrow now, this also leads me to my next line of questioning as well. We are also keeping tabs on how tough it is to deal with inflation. We just had a conversation here with the representative from FDC here saying that we might likely see inflation hit about 23.4% in the month of July. In terms of the expectations of adjustments in policy stance, do you think we might likely see come next month a much more hawkish move from the MPC, or you think this moderate rate hike will be the order of the day?
Yes, inflation is at 22.8, but I think people also have to understand the drivers of this inflation. It's more of a cost-push inflation than a demand pull. So I think a hawkish stance would cause an adverse effect on a cost-push driven inflation. So well, CBN has to show some reaction. So maybe they might be looking at slight hike, but not aggressive, anything aggressive. But yes, inflation numbers might go up next for July.
Well, the official data is going to definitely come up on Tuesday, so we're waiting for that from the National Bureau of Statistics. Odinaka, thank you so much for talking to us today, and do have yourself a wonderful weekend. That is Odinaka Linus-Nwokonkwo, fixed income dealer at Access Bank.